You work really hard to build your credit. And when it comes to submitting home loan applications, a lot of people have very genuine questions about what happens to their credit score. So this video is going to answer some of those frequently asked questions. Number one, will this be a hard inquiry? Yes, by default, it will be a hard inquiry unless you specifically request me to do a soft inquiry. Number two, why can't we just do a soft pull? Soft pulls don't always have the most up-to-date information. And so in order for me to issue pre-approval and put my name on that letter that says that you're qualified, I want to make sure that we've got the most accurate and up-to-date info. So it has to be a hard pull in order to issue pre-approval. Now I can certainly do a soft pull if you just want to kind of check to see where your score is sitting roughly, or if you know that you're not ready to start the purchase process yet, that's not a problem. But if we're trying to get pre-approved, I need to do a hard pull. Number three, will a hard pull drop my score? Technically yes, but only by a couple points. It's really not that big of a deal. Number four, if my score drops when I pull credit, will that hurt my approval? This is kind of a Schrodinger's box question, isn't it? I can't give you an approval if I don't have your credit, but if I pull your credit and it drops your score, how would I know if it would hurt your approval or not? Mortgage pricing is based on 20-point tiers, 720 to 739, 740 to 759, etc. And so if your score drops from 730 to 726, it literally has absolutely no impact whatsoever on your home loan. Number five, what if I want to shop around? The reason for this question comes from the fact that if you constantly pull your credit from various lenders for various reasons, it makes you look like you're desperate for credit, which makes it seem like you are not so creditworthy. However, there is a grace period when it comes to shopping around. Typically it's 2 weeks to 30 days, and any inquiries of the same type will only count as one inquiry during that time. So for example, if you are shopping around at 10 different mortgage lenders and you do so within 1 week, that's perfectly fine. It won't impact your credit whatsoever. But if you apply for an auto loan and then you get a credit card and then you get a store card and then you get a mortgage and then a luxury line, then that's going to count as different hits because you're not shopping around, you're simply applying for multiple different types of credit. Number six, how long is a pre-approval good for? A pre-approval is only as good as the credit report. We need to close the transaction, meaning funding and recording and you moving into the house before the credit report turns 120 days old. Therefore, I'm going to write my pre-approvals to expire 90 days from the time that I pull your credit, and this is to allow for a standard 30-day closing. Number seven, what happens if we don't close within that 120-day time frame? Well, the easy answer is that we're gonna have to re-pull credit. However, if you're shopping around and you haven't quite found that right house for you, I'm not going to automatically re-pull your credit after 90 or 120 days. Instead, I'm going to wait for you to tell me that you are either under contract or right about to be under contract, so that way I could pull your credit if I need to and make sure that there's no surprises that will come up between now and closing. If I wait until 3 days before closing to re-pull your credit and come to find out that you had another trade line or something, then that's going to cause problems. So I want to make sure that that's taken care of up front as much as possible without unnecessarily pulling your credit more times than I have to. Number eight, what is considered a good credit score? This is going to depend on the loan type. If you're getting a government loan like FHA or VA or USDA, then a good credit score is pretty much considered 620 or 640. Anything above that is just icing on the cake. If you're trying to get a conventional loan, I'd say a good credit score is about 740, but you can still get away with pretty decent terms at 720 or even 700 depending on the circumstances. Number nine, can I get a better deal by bringing on a co-borrower with better credit? The answer is no. When it comes to consumer loans, like auto loans, personal loans, credit cards, stuff like that, having a higher credit score can help get you better terms because they typically go off of whoever's score is higher. But in mortgage land, we go off of whoever's score is lower. Number 10, what's the best way to improve my credit? Unfortunately, it's kind of impossible to answer this question to a broad audience because it's such a case-by-case kind of answer. But in general, you want to make sure that you pay your bills on time, have a good mix of credit. So instead of having 10 credit cards, having like 3 credit cards and a personal loan and 2 auto loans and a mortgage and a luxury line for jewelry, that kind of thing, is going to help you better than having a bunch of trade lines that are in the same category. And number 3, be on top of it. You are responsible for your own credit score. I get that life happens, but ultimately the decisions that you make as you're living life usually translate pretty well to your credit score. So if you're overall a genuinely responsible person, you're gonna have a good credit score. Your credit score is a measure of trust, and you have to be able to show these credit bureaus that you are trustworthy with your credit. That's all I can come up with for right now. If you have any other questions, leave a comment, and I'll look forward to talking to you soon.